Grayscale Bitcoin Trust's discount narrowed to 35%, the lowest since November 7th, following what seemed to be a favorable court hearing on Tuesday for Grayscale investments. Judges appeared skeptical of the SEC's logic in rejecting Grayscale's bid to convert the trust into a spot Bitcoin ETF while approving Bitcoin futures ETFs. Grayscale and CoinDesk are both owned by Digital Currency Group. Joining us now to discuss is Janae Eo. She's the Director of Financial Policy at Chamber of Progress, a tech advocacy group. Janae, great to have you on the show. Let's take a look at a tweet by the Chamber of Progress from yesterday. It says, bottom line, the case is far from over, but after today's oral arguments, it seems very possible that the panel of judges sides with Grayscale and requires the SEC to stop roadblocking the launch of Grayscale's new Bitcoin ETP. Explain what's going on here.
Yeah, so thank you so much for having me. This case we've been following pretty closely so far, and with the oral arguments yesterday, the biggest thing that I've seen was the judges not seeing a difference between spot ETPs and future ETPs, which is extremely helpful for Grayscale. Just as background, Bitcoin futures derive their pricing from the underlying spot Bitcoin market, which the judges panel referenced during their questions to the SEC. You know, why this is important is because these ETPs increase investor access to the crypto markets and other digital assets. And so by the SEC allowing this spot Bitcoin ETF to enter in the market, you're going to increase the amount of investors that will be able to participate in the digital asset ecosystem.
Yeah, it's important for viewers to know that, I mean, spot Bitcoin ETFs have been trying to be starting with the Winklevoss twins, they've tried to approve a spot Bitcoin ETF since about 2013. The SEC has cited, concern with offshore exchanges and getting the Bitcoin price from their indexes and citing market manipulation, potential fraud, but yet they are allowing Bitcoin futures ETFs, which get their information as well from those very exchanges. So I guess the concern here is whether or not the SEC could walk back their approval of Bitcoin futures ETFs if they are forced to decide, and then just eliminate all exposure in the ETF market to Bitcoin.
No, absolutely. And that's something that we've been thinking about as well. One of the questions that was asked during the oral arguments yesterday was, what would the impact be on that if the judges ruled in favor of Grayscale? And, it is possible that, the SEC could roll back all of the futures ETFs just to save face. But I think, that is just part of the bottom line here, which is what the SEC's ultimate goals are for the digital asset industry. They ultimately want to reduce accessibility to crypto retail investing. They've done this before by, issuing subpoena to Robinhood around their crypto operations, and also working in tandem with other regulators and also federal departments, just to inquire about specific activities in the digital asset space that banks and other financial institutions are participating in around crypto. So I think, this is just part of their attack on, reducing crypto's impact currently on our society, which has gained momentum in the past few years.
Can you also explain the significance of this case in terms of having the SEC having to go into court and argue their points before an authority that can actually decide on whether or not their arguments are logical or not?
No, I think this is actually significant, just because thinking about the digital asset ecosystem, there are very few companies that can afford the lawsuit. Just thinking about, how the SEC has said to, they've asked digital asset companies to come in and register, not thinking about the administrative costs that it takes to actually come into compliance with the SEC, meet their demands. For some companies, it's costing them $2 million. And if you're a brand new company, or you're, a company in its infancy, some of those costs are insurmountable, and being able to fund a lawsuit, at this scale is also challenging. dealing with enforcement actions from the SEC where you have to shell out hundreds of millions of dollars, it can really do some significant damage to, entry players in this space. And so, I applaud Grayscale for their efforts on, standing up to the SEC and telling them, hey, we followed all of your directions, we followed your instructions, we're good actors in this space, we've worked with you on this for the past few years, and, we deserve, this approval.
Mm-hmm. Meanwhile, Fed Chair Jerome Powell has been testifying on Capitol Hill over these past 2 days. Yesterday, he said banks should be quite cautious about getting involved in the digital assets. And today we're learning JP Morgan is reportedly ending its banking relationship with Gemini. So, is there a chilling effect among banks dealing with crypto because of more regulatory scrutiny?
I think that's absolutely valid. I feel like banks, are trying to reduce their access with the digital asset space because of consistent guidance from the OCC and from the Federal Reserve. I think we're seeing a lot of this play out, like you mentioned with JP Morgan. But I don't think that this is stopping banks from exploring the digital asset space. Just thinking about the New York Fed pilot program with all of these payment companies and also banks looking at CBDCs and infrastructure. It just to me it looks like the government is kind of taking the things that are making the digital asset ecosystem thrive, and they're using that to apply to, developing the CBDC infrastructure. I really think that in the long run, banks are going to have the same technology that digital asset companies are enjoying right now. But I do feel that, right now there's just kind of like a choke point happening between banks and the digital asset space.
Janae, 60 seconds, but just quickly, Fed Chair Jerome Powell was testifying for House lawmakers today, and one of the questions he was asked if a CBDC or a digital dollar backed by U.S. government could make stablecoins or other cryptocurrencies basically obsolete. Your thoughts? Is that a common thought on DC?
Well, I've seen a lot of support for CBDCs, from legislators, but I really think that another thing we should think about is yesterday when Senator Lummis asked about, well-regulated stablecoins being able to operate instead of a CBDC. I think that's something that we should also be taking into consideration. Do we need to rely on the federal government to issue a digital currency when we have, well-regulated stablecoins like Circle, who are doing the same duties that a CBDC would be, in effect doing, at the wholesale and retail levels. So I wouldn't say, cryptocurrency would be obsolete, but I think that, there just needs to be a little bit more conversation with legislators on how we can, use the technology for good.
Janae, thanks so much for joining us. That was Chamber of Progress Director of Financial Policy, Janae Eo.